All right, welcome everyone. This is Bob Maurer. It is Monday, 21st of October, around about 7 o'clock-ish my time at night. Want to do a review of the current seasonal futures spreads strategies, see how things are looking for the ongoing spreads. And also I've got 4 new ones to introduce. I won't go into a deep dive in the 4 new ones. I'll just quickly introduce them. I'm going to be publishing separate videos for those. So without further ado, let's hop into it. Down into the portal, you'll see the most current PDF version uploaded a bit ago today. And here we have it. So for the week of 10/20. And this is what we're looking at. So top row, number 321, bear spread in rice. This one is flat. The stop was hit. Look at that one. 328, bear spread in hogs. We've been looking at that since the end of September. We'll see what the status is on that. And then the bottom 4 are all new ones. So 329 bear spread cotton, 330 bear spread coffee C contract, which is Arabica. 331 is wheat, soft red winter wheat, and 332 is crude. So those are all bear spreads, new ones setting up for this week. Down into the charts here, we'll take them one by one. First of all, the rice. So back on the 11th, which was this date right here, I recommended that we drop the stop down to negative 12, and hopefully it did that because the market had a massive rally to the upside today. So would have taken a nice gainer at the time, at least for the entry level 2 traders, and turned it into a loss if you stayed with it. Market also did, after I recommended it to be lowered on that stop, did touch the negative 18. So those who didn't get to the change in the stop or opted not to, I did see some fills come across at negative 18. So might have gotten filled there. But for purposes of this advisory, I'm going to go conservative route and say that we were stopped at negative 12 for the most part. And that would have been about break even for the more conservative entry level 2 traders, and would have been about a penny and a half loss, $30 per spread for the about $60 per spread for the more aggressive average in traders. All right. So that is trade number 321. It got stopped out. We will move that one along. All right. And then we've got the hogger. So this is strategy number 328. We've been looking at this one for a few weeks now. No changes to the strategy. Currently sitting with some level of unrealized loss. Looks like for both the level 1 and the average in traders and the more conservative level 2 traders. So barely a loss, but nonetheless looks like it is. No changes to the strategy. I walked it forward and it still looks good. So this thing should, if it does what it's supposed to do, stall out pretty quick and then start moving south. Might need to end up raising this target 1 a bit, looking at the data, but I want to see what happens through this week, and then I will adjust accordingly. All right. So no change to the strategy, and we'll see how this evolves throughout the week. Okay, then I got new spread, cotton. So this one actually started on the 16th and goes through the 9th. We are looking to get short. The 2 levels are, so this is, well, let me just start this real quick here. Number 329, bear spread in cotton, long May, short D's. And the entry levels are going to be negative 327, negative 307, stop at negative 263. Then we got our targets down below there. So we're looking for this little trend here to continue after a bit of a bounce. So we get a little bit of a bounce and then continue on down to the south side there. And again, I'll be posting the more specific rationale for the strategy shortly. Then a new strategy, number 330, bear spread, coffee C. As mentioned, that's the Arabica. We are looking to get short, and the way we're going to do it is we're going to wait for today's settlement. That'll be our benchmark. Then we're going to add 40 points and 80 points for our 2 entry levels, add 125 points for our stop, and then for the targets, negative minus 35 and minus 60. All right, so we'll wait for the official settle, and then we'll go ahead and benchmark all those, and we will have our entries and exits. So that is the bear spread in coffee. And then another new spread here in wheat. in the deferred contract. So this is going to be long July, short May in the soft red winter wheat. Now this one doesn't start until tomorrow, so we got to wait for tomorrow's close. And that'll be our benchmark. Get rid of this real quick. So our benchmark will be close of day 0, and then that's going to be where we get in on our first half of our allocation for the more aggressive average in traders. So be mindful of that if you're looking to get in this one. According to my recommendations, you'll be looking to get short on the close tomorrow for the first half of your allocation. And then the second entry level will be tomorrow's close plus 2.25. Stop is plus 5 cents. And then we've got our targets -2.5, -4, and -6. All right. So that is strategy number 331, bear spread in wheats. Looking to get short. Pretty much just going with this overall sideways trend at the moment. And then lastly, we got crude. So this is strategy number 332, bear spread, long March, short Feb crude. And we are looking to get short, and we're looking to get short. This actually gets benchmarked tomorrow also, so we'll wait for tomorrow's close. That'll be our benchmark, and then we're going to add either 7 points or 18 points for our entry levels, add 41 for our stop, and then we got our targets down there, -18, -39, and -61, subtracting off of the close tomorrow. All right, it's not 25. Let me get rid of that. So wherever closes, that'll be our benchmark. We do the math on the entries and exits. And pretty much this one's going to be going with the sideways trend. A little choppier on this one, but basically saying a high of about 50, low of about somewhere in the teens. And we're looking to sell a bounce and have it rotate back down to the bottom end of the range. So the seasonal's in the driver's seat, but we're kind of playing the character of the market at the moment also. All right, so 4 new strategies. That I think brings everything up to speed. Currently sitting with some level of realized loss in the lean hog, but again, I did walk it forward. It looks good going forward. And then we've got 4 new strategies, and then the rough rice, as I said, technically I'm writing it off as a loss because, well, not a loss, but a break even for the level 2 traders who put the stop in at -12. Loss for the more aggressive average in traders, and maybe some gut fill that's -18. Maybe they didn't. I did see some fills, but I can't necessarily say that everybody would have done that. So that's where we're at. All right. If you have any questions, comments, anything of interest, feel free to let me know. I'm going to leave it there. And thanks so much for watching.